In a note to clients yesterday, Wedbush's Dan Ives wrote his firm is tracking shipping times, that he's seeing particularly strong demand for iPhone 17 Pro models, which is a positive sign for Apple. Dan Ives also hiked his price target to $310 a share, one of the highest on the street. And we're joined by Dan Ives right now to discuss what he's seeing in Apple right now. Your old price target, we just showed at about $270. By the way, the street's at about $272, right around there, the consensus. What are you seeing that the rest of your peers just aren't seeing?
Surprise upgrade cycle. I mean, look, coming in here, we thought scale of 110 is going to be about an 8.5. The Pro models, I mean, we're seeing actually massive demand in terms of online as well as in the stores. ASPs are going to see an uplift as well. So you combine this with 315 million have not upgraded their phones in 4 years. This is finally, I think, the upgrade cycle the streets hoped for the last few years.
Wait, I want to correct myself. The street's at about 247. So you're considerably more bullish.
Coming up. I think.
Okay, you think it's actively coming up. Yeah. But either way, you're considerably more bullish than everybody else. What makes this time around different? Now, I will admit that we saw reports from London and from China, Chinese consumers lining up to get the iPhone, even though it doesn't have a lot of the features that they have in their domestic phones, like foldable and AI features and things like that. Why is this so different this time around from the 16, where demand was kind of muted? I remember we had our reporter, Steve Kovac, outside the Apple store for the 16. Nobody's lining up.
Yeah, look, 16 was disappointment. And I think you're, to some extent, that disappointment now, combined with some model changes, is leading to what...
But what is it? What's different this time around? Longer battery life? Is it the live translation and the AirPods? Like, what's getting people so excited?
Look, I think the surprise is going to be the Air. I mean, if you look at iPhone Air, that's going to be, I think, the star of this show, and especially in the U.S. I mean, I saw in the stores over the weekend, Frank, 3 of every 10 were coming in for the Air. So in terms of some of the model changes. And then you think about China, because of regulatory, that's still not even on sale. So I think we could be looking at what could be 240, 250 million units. Street was about 230 million. So I think as that comes through, this could push Apple $4 trillion market cap.
All right, while we have you here, I also want to talk to you about the new H-1B visa news. We kind of touched on some of the companies that are most impacted, Amazon, Goldman Sachs, a number of big firms that a lot of people know. In general, this policy, how do you see it impacting the broader tech sector? We had a guest on just a short time ago, the CEO of Payoneer. He believes it's going to really impact scaling companies. What do you see as the impact to the tech sector?
Yeah, it was a great interview. Look, the reality is tech companies, I mean, backs against the wall because they're going to have to pay up for that in terms of some of the talent outside HB1. Look, the issue is, if you want to hire an engineer, 800,000 or 150,000. So, I mean, this has really been the opportunity for them to get cheaper, labor. But I think the reality is that they're going to have to go more, toward U.S. workers, given some of the cost structure. But for tech, it's an arms race right now. And in this AI arms race, they don't have time to basically go to the whiteboard. So you're going to have to see them pay up pretty significantly in Silicon Valley.
We're looking at Indian IT companies under quite a bit of pressure, down about 3 1/3 to almost 5%, just across the board, looking at some of those names. Before we let you go, we got to talk to you about the EV sector. We saw Berkshire Hathaway sell its stake of BYD. It was one of the, the leaders in investing in BYD. Does that change the investability of the not only Chinese tech sector, but Chinese EVs?
Look, I think BYD has been obviously a phenomenal play for them. Look, competition's increasing, and we've seen from the Tesla perspective as well. But I do actually believe that's a sector that's actually still going to be extremely strong. I mean, competition's increasing.
Strong sales or strong margins and strong profit because they clearly compete on price.
No doubt. But if you look at overall demand, I mean, it's gone through a soft spot. But I think when you look at the next few years, you're going to see 20, 30% conversion in China. I continue to think the bigger winner is going to be Tesla. BYD is going to be a clear winner as well. That's in the event we're bullish on.
But when you see a big name like Berkshire Hathaway pull out of that stock, it's obviously putting some pressure on the entire Chinese EV sector. Does that change the view of it? We had a conversation earlier about Chinese tech stocks and the Chinese market in general. Is it now investable after thoughts before that it wasn't? Does this move, does it change the view of Chinese EVs? Because we saw a similar move when Berkshire Hathaway got into healthcare. That made people feel a lot more positive about healthcare.
Yeah, look, when they talk, they make a move everyone's going to watch for good reason. But I do think, look, a lot of this is just U.S.-China negotiations in terms of trade, what that means. Frank, I think if you see much more positives in terms of this, you're actually going to see U.S. investors focused a lot more on Chinese players. It's still a bit of caution when it comes to BYD and others, and that's why when Berkshire did here, I think sends a little bit of a signal that will show some caution.